Okay, thank you. Before we start with the purpose of this class, I thought let's continue with keeping it nice and interactive. So I'm going to see if I can use a couple of polls this evening as well. So please feel free to just engage and interact. It is anonymous. You will be able to see the results. But I think it's hopefully just to add a bit of interaction to this class as well. You have done the effort to be here. So please feel free to take part. I hope you can see the poll. Oh no, I see there's a couple of people that doing great and good and just okay. And normally if somebody asks, how are you doing is okay, it's always, but why only okay? Why not good? Why not great? Let's see if we can change that not good, not great at all into something positive and see that this 2 hours this evening can really contribute towards your studies for test 2. Thank you for that. Okay, so the purpose of this class will be to discuss test 2, which is written in about 3 weeks' time. We're going to discuss the learning unit 2 topics. The class is recorded. Please participate and ask questions. Yes, I can see there's already a question. You can proceed.
Sorry, so are the tests not the 19th and the 20th?
The Tuesday and the Wednesday.
Yes.
Yes, apologies then for the dates.
Okay.
Let me
I was just double checking. I would
Yes, you're
appreciate the extra
correct.
day, but just double checking.
Yes, you're
Yeah.
correct. No, it's the 19th and the 20th. Thanks for that.
Okay. Thank you.
Before we also just start, I would also just like to give some feedback with regards to the test 1 results. It will be released hopefully tomorrow. Unfortunately, we were not used to use or allowed to use external markers anymore. And unfortunately, 2 of our team members were placed on or booked off sick for an extended period, which hampered the marking process. But we're almost there. So thank you for the patience in that regard. And then on that note, tomorrow evening is then also the test 1 debrief class. I think the announcement was also put out over the weekend.
Sorry, sir.
Yes.
I just want to confirm the times for tomorrow's class. I think on the first set of announcements it said 5:30, and then now it's saying under announcements it's saying at 4. But like there's some people like we have to come from work and so forth, so it says 4 o'clock to 6 o'clock.
Yes, thank you for the question. Yes, that is correct. Unfortunately, Mr. Ngele is currently on medication, being back from the extended sick leave, and unfortunately, the medication that he takes, it has some adverse effects, and he cannot take it like later than 6 in the evening.
Okay, no, I
So
understand.
apologies for that. Yes.
Okay, no worries. But it'll be recorded.
Yes, it will be recorded and shared.
Okay, thank you.
Okay, then, yes, you'll see there's quite a lot of topics for Learning Unit 2. This evening, we're going to discuss IAS 27, IFRS 10, and IFRS 3, the group statement modules. And then for Wednesday, we're going to discuss then the remaining 4 modules and then see, hopefully there's some time left also to do a question. If there's specific guidance that you want to discuss on Wednesday, once those 4 topics are discussed, please feel free to mention it in the chat as well. Then what I want to mention then specifically with regards to the group statement topics that we are handling this evening is you will see in Learning Unit 5, it's change in degree of control, related party disclosures, etc. But as you go through the list, you will see what is the disclosures about, what is related parties, what is the change in degree of control. And if I just go back one slide, it's of your consolidated financial statements. It is your subsidiaries. It is then your associates, your joint arrangements. What type of foreign operations are you invested in? Subsidiaries or associates. What type of disclosures are you doing? It's for your investments in subsidiaries, associates. The statement of cash flows, which includes your subsidiaries, associates. And for any of those type of questions, you will also always have to determine what is your purchase price, what is your shareholding percentage, what is NCI measured at, any IFRS 3 adjustments. So I really want to advise and implore you to please put a lot of effort in during learning unit 2, especially for these 3 group statement standards, because it does integrate with the rest of the learning units and topics that's coming later during the year. And like I said, if your knowledge now is sound and at a good level, there's a lot of easy marks to earn later on, because even for change in degree of control, it's say from an IFRS 9 investment to a subsidiary. I mean, for a subsidiary, it's IFRS 3, IFRS 10. So it's definitely advisable now, if you put in your hard work now with regards to that principles, when you get to those the topics, it will be a lot easier. So the purpose of this class is to see if we can take the puzzle, use the knowledge that we already have within you, and just bring it together to actually form the whole picture to be able to take over the accounting professions. So before I start, are there any questions or any comments that somebody want to make? Okay, then I'll start with our first standard, IAS 27. It's nice and easy. The method that I always use when I have to start studying, of course, is first to look at the proficiency level. So for IAS 27, everything is assessed at level 3 except for the scope, and then investment entity, which is excluded, fair value in the separate records, equity method in the separate records, group reorganizations. So when we go to the standard, we can actually then see it's a nice short and sweet one. There's the scope, which is excluded, and then there's some definitions, preparations, disclosures, and I'm just going to then forward to the relevant section for us, which is IAS 27 paragraph 10, which will state in a group environment, when an entity prepares separate financial statements, it shall account for these investments in subsidiaries, joint ventures, and associates either at cost or then in accordance with IFRS 9 or the equity method. But from the previous slide, we saw option B and C is excluded. So for our purposes, we know it's at the cost that we originally paid, and we are happy to move on, and that is IAS 27. Any questions with regards to IAS 27? Hopefully, or luckily, all the standards were as easy or simple as that one. No, but on a serious note, of course, it's who, how, when, what, why, where. So I see a couple of familiar names in the meeting, and it's through the consultations and the emails. Welcome. But you all have known what I continuously state is that the good thing about financial accounting is everything that we recognize, classify, measure, how we recognize, when we recognize, why are we recognizing it, is based on the standard. So for accounting, your first port of call, your first starting point should always be the standard. So while you are revising and doing questions and examples, and there's something that's being done and you don't understand the why or the how or when, then it's advisable to go to the standard to understand the relevant principle, because what is a question apart from being 10 or 15 principles put together? It is, so what is a question then? All of the principles. So if you're able to do the principle, then when you get into a test, if there's 10 principles or 15 principles, you already know, have a good exam technique and know, but for the first principle, how to determine, for example, the consideration that is paid, I am able to do that. If you get to the second paragraph and you see a principle that you struggle with or you're unsure of, you skip that one and you move on to the third one, the third paragraph. And then you see, as you continue, get the confidence by doing the principles that you can do, earning the marks that you can, and leaving the principles that maybe it's a bit more difficult or you're unsure for last. And you'll see it might even be that you don't have time to go back to attempt that principle, but you've actually now scored the maximum number of marks within the allocated time. Okay, so now we are moving on to IFRS 10, which is our base standard. for a subsidiary, the important thing, of course, again, is to start with the proficiency levels. And the whole standard is at level 3, again, except for the scope, and then some exclusions specifically. So it's a good idea in the standard, of course, just to be aware which sections you should not try to study or attempt to study and not waste unnecessary time because it will not be assessed. One of those is the investment entities, delegated power, principal agent considerations, etc. Looking at the standard itself, it's quite a short standard. It's the loss of control, which is only dealt with in Learning Unit 5. It's paragraph 25 already, but as you would know from your revision, the majority of the content of the standard is actually contained in the application guidance. So it's just a good idea to have an overview of the standard. The type of questions that you can get for an IFRS 10 question is discussion, of course, discuss whether you have power, control, etc. But also, of course, then to actually do an actual consolidation, present the statement of profit or loss, do pro forma consolidation journals, or presentation and disclosure. So our starting point for this evening then would be the basis of IFRS 10. But what is it about? And it's if an entity controls another entity, it must consolidate that entity. There are a couple of exceptions. It's if the parent is itself a wholly owned subsidiary, its debt equity instruments are not traded publicly, or if the parent is considered an investment entity. And you will remember from IAS 27, it also said investment entities are excluded. So this is not important to note at the next slide. It's just important to note when you actually see this information, you should know, okay, it's an investment entity, it should be excluded. I should not study this. But it's your typical Allan Gray, Coronation, those type of funds, where it's actually providing investment management services. So I'm just going to leave it at that. Then coming to the actual important part of the standard, which will form the basis of the majority of your discussion questions, it is the definition of control. An investor controls an investee when it is exposed or has rights to variable returns from its involvement with the investee and has the ability to affect those returns. And then after that, of course, it will control if all the following are present: power, exposure to the rights, the ability to use the power. So apart from the control definition, the important next definition is power. So before we continue on that, when would you know when to discuss whether it's control or power? Of course, it will depend on the required. And that's very good exam technique, of course, is always to note what is the required. So if the required states discuss whether company A needs to consolidate company B, then your starting point would be it will need to consolidate company B if it's a subsidiary. When is it a subsidiary? It's when we have control. When do we have control? Also when we have power. So that will then form the basis. If the required only states discuss whether we have power, then of course you only use that definition then as your starting point. It's very important at this point to note that the test 2 topics are limited to these 7 standards. But remember, a good IIC integration, when you get to the end of the year, the type of question might not be discuss how the investment should be recognized or classified or measured in accordance with IFRS 10. The required might only state, discuss how company A should recognize the investment in company B, and then end there. Then there's no limitation on the scope. It does not say only in terms of IFRS 10, exclude IAS 28 or IFRS 11. Then you would need to use your relevant knowledge, but of course, based on the information in the question, to know that yes, IAS 28 will say if you have more than 20% of the shares, significant influence is presumed. So then you might also discuss that, even though it looks like a control question. One thing I forgot to state at the beginning of the class. Yes.
Sorry to interrupt you, sir. When you discussed how the question in the IELTS can say, discuss how company X should recognize company Y, would there be a difference when it says in its separate financial statements than in the consolidated financial statements?
Yes, that's a very valid question, and that's especially relevant in a group scenario where you have to first be 100% sure in whose records we are dealing with. Is it the parent separate records or in the group? But yes, the accounting treatment would differ between the two, depending on the required. If they say how it should be recognized, then of course it will be the same that it's a subsidiary investment in the separate records, but when you get to the group, it's also an investment in a subsidiary. It's just that we are now consolidating the financial information of the subsidiary. But when it then comes to recognition or measurement, we would say in the separate records, we only recognize it at cost, where of course, again, in the consolidated records, there we would have to apply the consolidation procedures against the financial information of the subsidiary as well.
Yes, so you would mention those things when you apply that discussion method, the IRCMPD, but if they don't limit you, let's say in the question they say do not recognize, do not discuss measurement criteria. Is that correct?
Yes, definitely. You should be guided by the amount of marks that's also available. Yes.
Okay. Okay, thank
So
you.
if it's a short 3 or 5 mark question, of course, it would be very limited in scope, but more marks are available if it gets to above 10 or 12 or 15, then you need to go wider. And that's normally, if it's recognition or measurements, especially, you would start discussing deferred tax implications or whether or how often it should be subjected to an impairment test, etc. But I mean, if it's only a 3 or 5 mark question, you won't necessarily go that wide in your scope.
Yes. Yeah, so like in those 3 to 5 mark questions, you'd mainly, again, depending on the required, you'd mainly discuss power and control.
Yes.
Okay, thank you.
Then before we proceed, I just want to also just clarify, in Learning Unit 2, in some of the questions, there are some IS28 integration questions because those questions were set at different points during the year, and also when it might have been that the associates were also examinable at the same time as the subsidiaries. But directing you back to the topics for this learning unit and then this test specifically, it does not include IS28. So you do not need to know the equity method of accounting for test 2 as yet. It will only be assessed later during the year. Okay, so the slide that we have at the moment, it's just bringing the control definition together. So we're going to discuss each requirement of the definition. So let's start with the definition of power. I like adding the actual standard again to show you have the standards with you in the exam, in the test, and in AIC as well. So it should definitely be your friend, and that should be your starting point. Remember, you don't need to know everything off by heart. You should just have a good overview of the standard as well. So for power, again, an investor has power when the investor has existing rights that give it the current ability to direct the relevant activities. So there's 2 components. The existing rights is also contained in the control definition, but when discussing power, there's a bit more guidance that's required. And in this case, it's also that those existing rights should be substantive. What does substantive mean? It must be that the holder has a practical ability to exercise that right. So that is the important part. There should be no barriers or a time delay or anything to that effect before the investor can actually exercise that right. Then this is where the use of the standard comes in, which is quite helpful. In the application guidance, they do provide examples for each type of assessment of what relevant activities types there are. And in this case, what are existing right types? And it's rights in the form of voting or potential voting rights. And I think that forms the main basis of any assessment, is to state, but yes, we actually have a 50% voting right or existing right. And then other rights could be to remove, appoint, reassign, manage key management personnel, rights to appoint or remove another entity, and then other rights as well. But then from a practical exam technique question, how would you know which of these to discuss in a practical question or practical scenario? And the answer is you should be guided by the information in the scenario. So if the scenario does not state anything with regards to directors or management and who can appoint the majority of the board of directors or who can fire them, etc., then of course it's not necessary to discuss that. So that's an important exam technique that you should practice, is that skill to actually identify, but what theory and the standard I should use to base my answer on. And everything that should be based on the information in the scenario. Don't discuss something that's not there. And you'll see as we do a couple of short examples later on, hopefully it will help you to make that link to say, but yes, okay, now if I have a good overview of the standard based on the information, then in the scenario, I am able to apply. This is just also wanted just to highlight it, that the substantive rights, what factors do you need to consider, whether there are barriers, economic or otherwise, meaning what is the financial price? It might be out of the money, the strike price is very high, and those type of things, which you should then consider whether a right is substantive. So if we look at our first example, you see P Limited acquired an option on 1 April. The option will be settled 25 days later. In terms of the MOI, the policy over the relevant activities, and we know for our assessment for control, relevant activities is very important. It can only be changed at a special or scheduled shareholders meeting. And then they say the next meeting is only in 3 months' time, but a shareholders having enough of the voting rights can call a meeting, but there must be 30 days notice. So we can already see there's a discourse between the 30 days notice, but that the option will be settled within 25 days. So if I put up, let me see, just give me a couple of seconds. Then do you think the right is substantive, yes or no? Just a quick poll. Okay, it's a fairly even split between yes and no. Okay, there's the yes is in the lead. But in this case, again, if we move back to the previous slide, which I just touched on briefly, where we have to then to go to, but what are the type of substantive factors that we need to consider in our assessment, and then whether there are any barriers, economic or otherwise. And then I did not have space to copy it, but then paragraph A lists a lot of factors. And of course, one of those factors, of course, is whether you have the practical ability. And in this case, because the special meeting can only be arranged within 30 days, it will actually, the right is a substantive right because we are settling it before anybody can actually convene a general meeting to change the relevant activities. So if we go to the solution, you'll see we have the practical ability. The options is settled within 25 days. So there is no barrier because the meeting where the relevant activities can be changed will only take place after 30 days. So therefore that option is substantive and should be considered. And why it might seem easy, okay, now I've seen this example, I will definitely know it going forward. You must remember how this example can take a twist is if they actually start giving meeting attendance percentages, stating that the one party, the holder, who has 50%, they always attend the annual general meetings. But some of the other shareholders only attend every second one, for example. Then that ratio also comes into play to determine whether you actually have effective rights to actually have the majority of votes at a general meeting based on previous or past voting right patterns as well. So you should not only limit it to, oh, it's within the 1 days, you should use the assessment overall based on the information in the scenario as well. Then, of course, what is the opposite of substantive rights? There's a hand, you can come in.
Oh, sorry. I was just alluding to the fact that it doesn't need to be instantaneous execution, essentially. So the notice period doesn't prevent the substantive right, essentially.
Yes, yes. It goes back to that practicability, and then, like you say, whether there's any barriers that prevents it. But as they're the one that can use it first, yes, they actually then have the practical ability to direct relevant activities.
Just based on those dates, when does it become a substantive right? It's not
It will
on
be.
the 1st of April, it's on the 25th of April, I would assume.
You will see in this case, okay, the facts of the question is maybe a bit limited, but
Yeah.
you would see on 1 April, they acquired the option for the majority of the shares. So the assessment will be on the 1st of April, but the assessment of control is a continuous process. So it's not only at one day this year or over 10-year period. Is as the facts and circumstances change, you need to continuously reassess. But in this question, I assume the required would have said, discuss whether on 1 April P Limited has control over S Limited. And then we would say, okay, who has the current existing rights? Do they have any of the rights at the moment? Do they only have 0%, but they now will acquire the majority? So it might be then that from the required perspective, it would be on the 25th of April, discuss
Yes.
whether they will have control. But I mean,
Okay.
the facts is a bit
Okay.
limited to just provide you with a conclusive answer.
All right, thanks.
Coming to the protective rights, of course, it's the opposite. It's you only have rights that protect your investment. So those would typically be rights that a lender or a borrower would have to say, but if the loan covenants are broken, you have to repay immediately, or those type of things. But shareholding rights could also be protective in the nature, or in the sense that some decisions that protects the rights are attributed to one portion of shareholders, but the majority of the decisions in regarding the related activities is still held by another party. So the protective rights is more, they can decide on actions to do or not to do, but to protect their interests. So we'll see when we get to an example, it might be a bit easier. But again, I just included the standard to show you that if you see, based on the scenario, it appears like it's restricting the borrower, or that the rights that they have, it doesn't relate to the relevant activities, then you should remember protective rights. Let me see, I might have to discuss that for a mark or two as well. Coming to potential voting rights, why it is important is that it should also be considered when assessing whether you have control or not. So that would be whether you have any options, but it's important that it's not only for you yourself that you have to assess, you also have to assess voting rights held by other parties, meaning that entity A only has 30%, but they might have an option to acquire 50% shareholding. And then we ask you, but for entity B, who currently has the other 70% shareholding, do they control it? And then you would have to assess, but what is the likelihood of the potential voting rights? Is it substantive? Do they have the practical ability to exercise? And then your assessment might be that even though, yes, we have 70% now, when the potential voting right is considered, we actually don't have the majority and actually then don't have control. So this, again, it's that substantive portion that is important. So P Limited owns 42% of the shares. S Limited issued share capital consists of 1,000 shares. P Limited also holds 400 convertible debentures. They are convertible at any time at the discretion of the holders. So there we can see there's no barriers. 2 debentures are convertible into 1 share. Does P Limited have power? So we can see another 500 shares is potentially converted from the debenture. If P has no barriers to prevent that exercise, it will ensure that, yes, they actually then increase the shareholding substantively to actually then have 52% of the shareholding. And we would discuss that, yes, based on existing rights only, they would have power over S Limited. What is important then with regards to this example where P Limited only owns 42%, but when we assess the potential voting rights, it increases to 52%. When we get to consolidation, we actually use the actual voting rights or shareholding rights of P Limited. So the potential voting rights is only considered when assessing control to determine, yes, control is there, yes or no. But once you assess, yes, it's control, yes, it should be consolidated, we only consolidate the existing shareholding, which makes sense. Then coming to the second part of the definition of control, you'd see it relates to relevant activities. The standard gives a nice definition. It's those activities that significantly affect the returns. And then luckily in the standard as well, it gives us quite nice examples: selling and purchasing of goods and services, managing financial assets, selecting, acquiring, disposing of assets. Again, how would you know in a question when to discuss relevant activities? It's if we will have to tell you, of course, what the relevant activities are. I see there's a couple of comments with regards to please mute. Is the sound still there? And now it should be gone now. I think everybody is muted now. Is that better? Okay, thanks. So this is actually the okay. Yeah, so again, the information in the scenario should guide you. It's if the scenario talks about company A is in the retail sector, the activities includes the purchasing of the products, signing of supplier contracts, distribution agreements to take the product to a warehouse, distribution warehouse, then to actually say, but there's activities with regards to insurance or whatever the case may be. As if the scenario starts expanding on those type of information, and you can see it's a possible control discussion, that should guide you that, yes, I must remember, it could be that I will have to expand on the relevant activities and make a decision on which activities are those activities that significantly affect the returns. So that is how you will assess, and then go to your standard if you're unsure and see what guidance does it give you to actually approach that or answer that question successfully. Then going to the next portion, it's the exposure to variable returns, which is also a nice one. You'll see it's actually quite far in the application guidance, but it's important to note that the exposure to the returns doesn't mean that the parent has actually received a return, meaning it's not required that a dividend is payable or would be paid. As long as you have shares, yes, there is a chance that you could get a dividend, so that's already your variable returns. Even if they state the dividend is paid annually at a fixed amount of R1,000, you might argue, but Herman, wait, that's not an indication of a variable return. But then I would say, yes, even though it is a fixed payment, the company might decide to change it or to actually liquidate the company to wind up its operations. And of course, me as a shareholder would then receive my portion of the net assets payable at that date. So that again is an example of a variable return. So it's important just to note that the parent doesn't actually need to receive a return for the specific year or for the period of assessment of control. And also if it's fixed, it's still an indication that it is variable, because it might even be if the company or the parent receives an administration fee that's fixed. Again, remember, if the company goes under, the subsidiary, then the parent would not receive that same amount. So again, that's just an indication of the variable return. So that's a nice short one for discussion. Again, how wide or what the scope should be of your discussion, it should be based on what the standard says. So if the scenario. So if the scenario starts discussing dividends and payments and historical rates, etc., then that should be an indication, but then I should also go wider in my discussion. But if it's silent, you can just state, yes, there's variable returns, they have shares, they would receive a dividend, and then there's your 1 mark. Then lastly, of course, there needs to be a link between your power that you have, the existing rights over the relevant activities, and that of course then influences your variable returns. But of course, if you have influence over the relevant activities, then of course you will impact the variable returns, because if you make good decisions over the relevant activities, hopefully they will make money, you will receive dividends, etc. So but that connection is part of your discussion, but that's normally also limited unless the scenario really goes provide you with enough information to go wider in your discussion. So let's look at P Limited supplies grilled and fried chicken meals. They've decided they no longer have the capacity to breed chickens. They've identified S as a main supplier. S signed a contract with P that will only supply chickens to P, and that the board of directors will be appointed by P Limited. P Limited also acquired 15% of the share capital and has guaranteed a loan of S Limited. P Limited owns several other investments in subsidiaries. Identify the type of investee that S Limited is of P Limited. So here you can see they actually provide us with some bit of background with regards to what the relevant activities are, the fact that they can appoint the board of directors. Oops, sorry for that line. But I mean, that's already an indication that we said, oh, but that's also an indication of existing rights. It's not only the shares. I see, let me pause here. I actually have the slides with me in a PDF format. If you just give me a second, I will just copy it in the chat if that's fine with everybody. Okay, while I pause here and just trying to copy it into the chat, is there any questions at the moment? Is the speed all right? You're looking forward to studying these topics. If you get a control question, will you be able to attempt it and do quite well?
Evening, sir. So I think a point you raised, what would really help is in the scenario should guide me on which points to discuss, because I think with that question, there's a lot of factors to discuss between power and control, especially your variable return, because sometimes I find myself a bit overwhelmed, like I don't know which parts to discuss, or even sometimes I'm not sure where to start. So I'll definitely be more conscious of when reading the scenario, which factors they discuss, so that can lead me into which type of theory I need to bring in.
Yes,
in
that's
answer my
a very
question.
good recap. Yes, that it's very important, and I think a lot of students also struggle with discussion type questions, and you actually have to practice it quite a lot. And I think one thing that we saw from test one especially was, unfortunately, a lot of time was wasted by students firstly writing the required down, which of course doesn't earn any marks, but secondly also with regards to writing theory down without the application. And I think that's also very important to make that distinction, that we provide the theory in our suggested solutions, but as a revision question or a revision solution to enable you to actually say, but I did not know, where did they state, how did I apply this? Is, oh, I can see, yes, in the standard they actually state this. So, but from your perspective, you should not write down any theory without the application. Yes, so that's very important. And then one tip that's normally also helpful is, if you still struggle to actually see, but how do you make the link from the scenario to the required to the solution, is to actually start with a question, but look at the solution first. Ask yourself, and if you read the first paragraph, but why are they stating this? And then you say, but I would expect them in the solution or the scenario to have told me that I have 60% of the shareholding. And then you go to the solution and you say, oh yes, here they state company A acquired 60%. Then the second point might be, why did they discuss the voting rights of another party, then you say, okay, but I would expect the scenario to state that in the scenario, a company B has option or convertible debenture in company C, the subsidiary, which appears to also be nearing redemption date, for example. And you go there and say, oh yes, yeah, I can see it's company B. And then how that will enforce your knowledge is that the next time that you read a scenario first, you can already think of how it links to a possible solution to earn marks as well. I see there's a hand, and I must mention, sorry, I'm struggling to copy it in the chat. It doesn't want to allow me.
Are you able to upload it under announcements, even if it's after the class? I think that'll be okay.
I can definitely, the announcement is maybe the easiest. If there's a question, you can come through, please. I see there's a hand. Are you sorted? I can see there's a queue. I think anyone can come through.
Oh, hi, sir.
Yes.
How are you?
Good on yourself.
I'm good, thank you. I just have one quick question with regards to the discussion questions. And you mentioned earlier that we should just focus on application, not really like repeat theory. So
Yes.
in our discussion, would it be okay for us, like if we say, so we just have like, so in terms of this IS 28 paragraph, whatever subparagraph, they say that sorry, give me a second. Basically, is it okay if I just like put in the paragraph and just start discussing?
Yes, you don't even need to put in a paragraph. We don't earn any marks for that, but it definitely helps the marker to also can follow your logical flow as well and to see the relevant application that you are making with regards to the information in the scenario and trying to attempt the required as well. But yes, that's good exam technique as well.
Okay, thank you, sir. Because I noticed that I waste a lot of time in terms of discussion questions by trying to like rewrite the standard and make sure that, okay, this is applicable to, and then apply to that. It's good to know that I can just go straight to application. Thank you.
Yes, and I think yes, as a president, I think that's important also why I wanted to mention in the class that all of our suggested solutions include a lot of theory, but that's for revision purposes. It's to afterwards, when you go through to state to make that link, yes, I have the standard, where did I find this theory to actually apply? But yes, when you answer your question, you'll see there's no marks awarded for that. So please don't write any theory down in the scenario, in your solution. But sometimes I know it does help to focus the thoughts and structure your solution. And if you are one of those that needs to write, and as you write, you actually think of what the solution would be, I would suggest taking some time and first write a structure for your solution, maybe down on a separate piece of paper. And then once you've done with your structure, then start with your answer. But then it's nice, short and concise, to the point, and you'll be able to earn the maximum number of marks.
Thank you, sir.
Okay, the next person can come through.
I have a question on this example. Do you mind me asking a question regarding this example, or
Yes.
would you like to further
Please.
explain? So obviously when you look at control, or let's say when you look at the definition of control, should this be consolidated into consolidated financial statements? Then firstly, we would look at power over the investee. Then we would look at exposure or rights to what do you call it, variable returns, and then the ability to use that power over the investee to affect the amount of returns from the investee. So in this instance, they've acquired 15% of the share capital of S. So that is the only call it returns that they're going to be entitled to. However, they do have, they can appoint the whole board which gives us significant power over the company, due to the fact that if we appoint a board of our choosing, those board members can what do you call it, initiate or make decisions. But this is where my question comes in, is how do I state, but what I want to state is the reason why the board, the fact that we can appoint the board influences our what do you call it, ability to use our power over the investee, is due to the fact that if the board members can say, listen here, we're going to implement a higher dividend structure, or we're going to implement this and implement this, but that's not necessarily in the scenario. So is it fine if I say that the fact that we can appoint the board gives us the ability to use our power over the investee to affect the amount of investor returns? Is that sufficient, or do I need to? What I'm trying to gauge is, I don't want to go out of the scenario. I don't want to get a marker's note that says this wasn't mentioned in the scenario, but sort of that's the factors that you would consider when appointing your own board, if that makes sense.
Yes, and it's a very valid question, and I think it's very important, and I think it comes back to, again, what the required would state, and then the number of marks, of course. So the number of marks will always guide the extent of the discussion. So if you can see while you're planning your answer, and it's say 5 marks, 4 marks, 10 marks, and you see, okay, but if I discuss power, and I say the existing rights, okay, that's 15%. If I say another form of the rights would be to appoint the directors, okay, that's another point. Then you say, but, okay, but for 10 marks, I might need to say, but the board of directors, or normally the entity, or not the entity, but the group that decides the relevant activities. And in this case, you might say, but the relevant activities would be to say, but they actually breed chickens, but they will also only provide P Limited now with that. But I mean, if it's only a 4 or 5 mark question that says discuss power, or whether you have control and you have to discuss all the various elements with regards to, I'm exposed to variable returns, I can use my power to influence it, then of course, yes, you would definitely not go as wide to infer or assume any additional facts that's not stated in the scenario. So I don't know if I actually kept my answer short enough for you. But
yes, that's perfect. Yeah, that's perfect. I just wanted to know, so I wouldn't lose marks if I go, because my first thought was the two things that the directors can influence is the fact that they can change the sales price, because they're only selling to us, and they can influence the dividend decision. Those are the two things that the board of directors can influence, change, if we appoint a board of directors that's going to be favorable to ourselves.
Yes.
But that's additional to the scenario.
Yes, and then like you say, it would have depended. It would have been nice if I actually included maybe the required that said, do they control it, and maybe the number of marks. But yes, you would see in the solution it did not go as wide, because it did discuss all the elements of control. And then if you touch that, just use the information in the scenario. And I think the checklist would be, in the end, if you go back to the scenario, it's almost to say, did I address the first paragraph? Yes. Second, yes. Okay, so all the information that was given, I have used it somewhere in the answer without inferring or implying additional information.
Okay, perfect. Thank you.
Okay, I see there's another hand. You can come through.
Hello. I just wanted to ask you this. It seems I may interpret you to think that you are saying we don't have to rewrite the theory whatsoever. We can just go directly to answer, for example, the issue of control. We can speak about the returns, the variable returns, and just write directly without having to whether list the requirement, or would I be correct to interpret it like that?
Yes, and I think a good example would be if we look at the first solution at the moment, which has the T, which is for theory, which says a subsidiary is an entity that is controlled by another entity. The other correct way that would have stated it, based on what the conclusion says, that P must consolidate, it would have been to start with P Limited would consolidate S Limited if it's controlled, and then it should therefore be consolidated. What I mean is, so you're actually using the theory terminology, but you're already applying it to the entities in your question. So even the second bullet, you would say, not according to IFRS 10, an investor who controls an investee when it is exposed to have rights. You would also then say, but P Limited would have control over S Limited if it is exposed to or have rights. And then you apply to say, but yes, P Limited has existing rights, the 15%. So yes, that first one is ticked. It is exposed to variable returns, and you can then apply that again to say through the 15% shareholding that it would be possible to earn dividends, for example. So the point that I'm trying to make is not write or use the theory, but don't state the theory for 2 or 3 paragraphs directly out of your standard and then actually only start with your answer. It's if you use the theory, you should already apply it to the scenario. And in this case, it would be the conclusion that must consolidate in terms of IFRS 10. It would be to start off with, they would consolidate if the following criteria are met. And then you start listing the criteria, the existing rights, exposure to variable returns, what is the relevant activities, etc. And then I think if you practice that, you'd see you're actually answering in a lot shorter, but your answer is shorter and concise to the point of actually addressing the required and earning enough marks to pass. Because I think some discussion questions, it is also fairly straightforward. So if it's a 10-mark question and you have 20 minutes, and if you're done after 12 minutes, don't try to fill up your pages by just adding more theory or more. If you're done after 12 minutes, that's great. You can continue to the next question. And then if there's time left at the end, then you can review and say, yes, did I address all the information in the scenario? Yes, I did discuss the directors. I did discuss whatever the case may be. So I think that's also a big part of the exam technique. It's not trying to fill the time before you move on to the next question as well.
Fantastic. Thank you very much.
Okay, great. And then this was then short and sweet. They have exposures to the variable returns. They are able to affect the returns through the power by appointing the board of directors. Therefore, they have control and power. Therefore, they must consolidate. So I think the other important issue here is, of course, to address the required. So if the required states, do they control it? Always conclude with yes or no, they don't control it. Or if they say, how should it be classified? Always conclude with a classification. So I think that's the other important thing, is not to forget that 1 mark. And on that note, for test 1 marking, I think the PVA marking was a bit light, if you can use that word, with regards to logical arguments, etc. It's important that you are aware and familiarize yourself with how and when you are earning those marks, and not to contradict yourself in a discussion. So to discuss that all the discussion will be yes, they control, and you conclude to say no, they don't control. I mean, that's a contradiction if you did not provide a discussion to say why it wasn't done. So I think don't just take the PVA mark as a given that you will get it. You must be aware of logically structuring your answer, or if it's presentation or critical thinking, etc. And I think it's important to review that as well, because even Psycho and the AIC, they're all moving towards the PVA is counting quite a large margin of the marks. I think it could be that it's even between 20 and 30 marks out of the 360. So it's coming to a point where it could almost be 8 or 10% of the paper. So it might say, oh, it's a given, I will have that, but it's important that you are able to still earn those PVA marks as well.
So
okay, so there, yes, you can.
Just a quick follow-up on the 2 questions before. Just sometimes the scenarios give, for example, they'll say the entity has rights to the invoicing, the blah, blah, blah. They'll list a bunch of different operational things. And in your answer, do you have to quote because X has rights to, and then list this laundry list sometimes of things, or can you group and say due to their power over the operational activities of the business, or is that too vague?
I think it would depend on the information that's provided, but if you want to group them, you would definitely group them by stating the relevant activities of company A are, and then you list the 2 or 3 that has been given in the scenario, because normally if they provide you with information with regards to the relevant activities, it's all always sometimes to do with the fact that another party also has power over some of the activities as well, so that you actually have to distinguish between what activities are relevant activities and what of the other activities is more secondary in nature or administrative in nature or ancillary in nature as a supporting function. And that would also then add your discussion to say, but yes, company A, the relevant activities are the following. Because they can appoint the board of directors, they also actually have control or a say in the relevant activities, and then that's part of your discussion. And then for company B, you would say they only have rights over these activities, which are not the relevant activities, which could indicate that they actually have more of a protective rights in nature type of discussion. But again, it's a good question, but again, it comes back to that dynamic of what you discuss is based on the required and in the scenario, and then of course the marks that's allocated. So those three, it's important. The scenario, required, number of marks.
So after you've distinguished what is or what are the relevant activities, later on in the discussion, you can just refer to those as relevant activities.
Yes.
Not that. Okay, great. Thank you.
With pleasure. Okay, then, so that was the control. I think in the summary, it's more of a flow chart. You can refer to it afterwards, which might help you with a discussion type of question with regards to whether voting rights are more than 50%. Yes, no. Are there other arrangements that can actually give you control? Yes, but are they substantive? Yes, go to the next step. No, okay, then it's not control. So this could help you in your practice as you do the questions to see, okay, but at which point does it actually fall outside then out of IFRS 10, and then if it's a IIC question or the exam question at the end where all your learning units are examinable, it might be then say, okay, there's no control, so let me now proceed to the next standard, which might be that yes, there's no control, but there might be joint control or there might be significant influence. So I think it's just helpful in that regard, and then this is just the second one that proceeds then to step 3, step 4, and then just step 5, that it means that it is a continuous assessment. You don't only assess that you have control once in theory or in practice, it will be every time that the facts and circumstances change. Yes, you can come through.
Evening, sir. So when you mentioned that, so if it doesn't meet the definition of control, then you proceed to other standards such as, I think, IS 27. What was my question again? My question, sorry, I think I just went blank.
No
yes, sorry, my question was, so would you always start with the IFRS 10 requirements?
It's a very good question, and no, you should be based on the required. So if the required says discuss whether you have control, then of course it's limited to IFRS 10. That's an IFRS 10 concept. If they state discuss how the investments should be recognized and measured, then it's very wide. Then it depends on the information in the scenario. Then it depends on the directors, relevant activities, or that it's joint control between two parties, or that no, yes, even though there's existing rights, which is 20% or more, there's actually no control. So then it defaults back to significant influence because they have more than 20%. So significant influence is assumed, and then that is your conclusion. But no, it's definitely based on the required of how far you should go and whether you should proceed to say, but yes, there's no control, and then you can enter if they say discuss whether you have control or not.
Okay, thank you, sir.
Pleasure. Then this was just a short example then from the learning unit itself that I thought it's just helpful just to show it after we've now been through the theory, just to show there were 3 different situations where you should discuss whether they have control or not. The thing that I wanted to discuss here was, which was helpful with regards to the relevant activities, it is that the 40% of the shares, it's owned by the managing director, and he's a meteorologist. He has the right to keep the boats from going out to sea when he expects severe weather. But when you look at the other activities of the company, it's not expanded upon, but it is a company that arranges whale watching expeditions. So we can clearly see that the one person who has shareholding rights, they are only in charge of an activity that keeps the boats from going out to sea when he expects severe weather. So that, from my perspective, would seem that it's more of a safety issue. It's not necessarily the most relevant activities of the entity. And then that should then, of course, be our discussion then as we proceed. So if we then say, of course, the required, whether it is a subsidiary. So we would say a subsidiary is when we have control, and then that is our first starting point. Our Great White as the inventor has to determine whether it is a parent by assessing whether it controls, and then you give the control definition. You will always use it. You will always use the power definition. And then I've just tried to color code a bit of the information in the solution. And you see there's our voting rights of 60%. Yes, it's the majority of voting rights. Sorry for that. And then with regards to the relevant activities, we can see that they have the right, or he has the right to keep the boats from going out to sea. It seems like it's more protective in nature. So he, the crew and tourists might be in danger if he does not exercise that right. And then if you go to this, the next, it would appear that it's a protective right. It's designed to protect his interests. So therefore, he does not have rights over the relevant activities. It falls back to Great White by default for the fact that the other person only has protective rights. So by default, we can then say Great White then has power over the relevant activities. They do have the voting rights. They can make decisions. They are exposed to the variable returns in the form of dividends. We conclude on power, we conclude on control, and then we can say, therefore, it is a subsidiary. So this was just sort of a bit of a example just to highlight. We did not go into existing rights and that they could appoint the directors or the managing directors in charge of relevant activities. So we say, no, he wasn't, based on the information in the scenario. So this was just an example to help you, if you go back to a discussion type question, to see, but how do we know, should we discuss relevant activities, or is it existing rights with regards to appointing of the directors, or is it to do with the variable returns, to say, but they get a management fee, the fact that they're shareholding, they get dividends. If they can appoint the managing director, he can actually influence the dividend policy. So none of that was necessary in this case, but just based on the information in the scenario. I'm just going to, this is in the slides, but this is also in your learning unit. It was also just to show quickly whether they have control. You can see the scenario was short and sweet. And it was just to say that the one entity, again, has rights that, that could, that they can restrict the entity from significantly changing the credit risk. So again, if you look at our control, our power, you see we actually only discuss rights in this case, because that's then where we are stuck. So we did not even move to the relevant activities or variable returns. We started with, yes, they hold the 55% interest, which is more than half of the voting rights. We would say that. So it's significant. But when we look at our information in the scenario where they talk about the rights, we can see, but wait a minute, they can only, the only rights they have is actually to restrict the entity from undertaking activities that could significantly change the credit risk. So we're actually then stuck. We say, but that's not substantive, it's protective. I mean, we enter, but it's protective, therefore it's not substantive, therefore they don't have control. So that was just a bit of the inverse to actually just practice that technique. This is, I've mentioned it a bit earlier as well. You'll see question 2. It is sometimes helpful if you struggle with your exam technique with regards to discussion type questions. Take one question, look at the solution first. And then if you read a specific solution, ask yourself for that paragraph or bullet point, what information would I expect to see in the question? So here I specifically did not copy the required. It says top lines will have power when it has existing rights that gives it the current ability. And then when I look at the conclusion, they will not have power as it will not have existing rights. So if I pause there, I can work backwards and say, okay, so I know the conclusion would have asked me to discuss whether they have power. Then if I look at the first bullet point, and say relevant activities, I see, okay, they actually expand quite a lot. It's grouped together what the different relevant activities are. I would expect in the scenario when I go there to see that they actually also tell me that. So apologies, it's a bit small, but here's the solution on the left. Here's my required on the right, where I can see, okay, whether I have power, so I say yes. Now I know next time that I have power, I will now give the definition at the top, conclude at the bottom. That's sorted. And then when you look at the definition here, just for easy reference point of view, you see there's the relevant activities. We can say, yes, it was provided just as a scenario, but with the caveat that it's the following relevant activities. So they've already applied it. They did not state if they have power over the relevant activities, etc. They started with the definition at the top, but with application, there's top lines, there's ABC, and then started to apply. And then relevant activities existing rights. So again, that was just an illustration for you to practice, because discussion type questions you will always get. It's important to practice it. It's something that you can score a lot of marks in. But of course, a good foundation of the standard is also necessary and advisable, so that you know what theory or paragraphs to refer back as your basis. Yes, so dream big, especially with regards to marks. And at this point, I just want to pause and just state, remember, short-term gain for this year would be pass my next test. A bit medium term would be hopefully test 4, the exam, and medium to longer would be AIC. Remember, you also want to become an awesome chartered accountant. Remember the knowledge, not only in financial accounting that you study, you should try to be the best accountant that you can be. So this information, even if you don't get it in test 2 or test 4 or the exam, hopefully you do get it somewhere, and you definitely will get a lot of these somewhere, is be an awesome accountant. And I think if you study from that perspective, sometimes it becomes a bit easier, especially if you have to study a topic that's maybe not as interesting. But just to remember that, but it will make you a nice, rounded, awesome accountant. Then the last part of IFRS 10, of course, is the consolidation procedure. So yes, now we've discussed it, we've concluded and said, yes, we have control. So now we say, okay, what is in the next step? And that's the actual consolidation. And then what does IFRS 10 say? The starting point, combine the trial balance of the parent and the subsidiary on a line-by-line basis. Eliminate your carrying amount of the parent's investment in the subsidiary. Recognize assets acquired and liabilities assumed. So the first 3, or 2 actually, is your pro forma at acquisition elimination journal. And then 4 and 5 is then where you apply your consolidation procedures to say it's one economic entity. I cannot have transactions with myself. Now I must eliminate all that intergroup balances. The last one would be, I don't own 100% of the shares. Now let me allocate NCI. And that's of course important, because my starting point starts off with 100% of the subsidiary. So I have 100% of everything of the subsidiary. I don't own everything. So my last step would be give NCI their due. From a practical point of view, so I cannot necessarily see all the chats. I can see some of them as they come through. I have posted the slides as an announcement. It should be available now. If somebody can just confirm in the chat, I think, for the rest of us. Thanks. It's a very simplified view of the consolidation procedures, but this is the basis, and it's very important that you understand this principle, because a lot of the adjustments then that will follow will actually make sense. So again, the first step is to add line by line the trial balance of the parent to the trial balance of the subsidiary, and that gives our combined trial balance. But it's important that's combined trial balance. It's the starting point of the consolidation. And for our purposes, that step is already presumed to have taken place. And what I mean with that is, if we ask you, present the statement of financial position, present or prepare, provide the pro forma journal entries, your starting point will always be this combined trial balance, everything of the parent and the subsidiary added together line by line. And what we are aiming to get to is this consolidated financial statement, which consists of the financial information of the parent and the subsidiary, but together they form one economic entity. And then how do we get to this endpoint? Through our pro forma journal entries. So through our pro forma journal entries is where we'd say, but yes, it's one economic entity. It cannot have an investment in itself. So I must eliminate the investment in S. I cannot have the share capital of both the parent and the subsidiary. So I eliminate the subsidiaries. I wasn't entitled to all the retained earnings of the subsidiary while it was not my subsidiary. So I have to add that back. So I think if you work towards that, hopefully a lot of the adjustment would make sense. And then also this, while preparing for the class thought, but let me try see can make it a bit more practical to a question that you already know. And then Mickey and Minnie, it's a good example. There's the separate trial balances of each one. Remember again, what was our first step in the consolidation process? It's adding everything together. So then I said, combined. There's our combined trial balance. This step is already assumed to have taken place. Now it's one economic entity. We have to work towards getting our consolidated trial balance correct. How do we do that? Through our pro forma journal entries. And by just giving a short summary, for example, you would remember from this example 1 in Learning Unit 2, the investment land was investment property in the separate records, but from a group's perspective, the consolidated entity, it's actually owner occupied because the parent is recognizing the land. So therefore I know, but I have to reclassify that investment property to normal land because it's owner occupied. So yes, how do I do that? Through a pro forma consolidation journal entry. So if we go through, we can see, of course, the combined trial balance does not have goodwill yet. So I have to recognize goodwill. It doesn't have non-controlling interests as yet. So this is just an example to show you what you start with in the consolidation and what we are aiming towards. And hopefully a lot of the adjustments then would make a lot more sense. Okay, this was then just the credit entries. Then what I also just wanted to show was, now that we have a consolidated trial balance, in this question specifically, we were asked to present the statement of profit or loss and financial position. So now we could just say, for example, the revenue, there's the 3.77, we could just take it. So is it advisable to present or calculate a consolidated trial balance in a question? It depends on the required. It depends on your time that you have available. But in this question, if they ask for 2 statements, which I doubt you would get in a 20-mark question that you have to present 2 statements, but in any case, this method could actually quite help you that as you calculate, as you add line by line, you'll see from the suggested solution, you'll get easy marks just by adding, for example, for trade payables, the parents plus the subsidiary, that gives us combined. And then we do the pro forma, that's maybe another mark, but for that balance, it might be 3 marks. So you actually see you get comfortable as you build your trial balance, you get easy marks, you get confidence from that. And the nice thing about then the consolidated trial balance is you then just slot it into your different statements because you already have the consolidated trial balance. So on that note, remember all calculations are marked if used. So you can use any calculation method, but it's very important that you must provide an answer. So a good exam technique for a statement like this would be, as you've completed or calculated your revenue figure in calculation 7, transfer it to your face and you know, okay, that is done. And the reason why that helps is if you see, okay, there's 5 minutes left for this question, you already know, but now maybe I'm only left with this last portion. Let me can calculate that for the rest of my calculations. I know I've already used them. I can relax in that sense that I don't need to scramble to say, but okay, where must I find my information to actually present in my statement? And I think that also is a big problem with exam technique, and then the difference between a close fail and actually a comfortable pass as well. Okay, so there's a couple of questions in the chat. I'm just going to pause here. Yes, I think I've touched on it. You can use the any calculation method that you're comfortable with, but you should definitely be keep the required and the number of marks in mind. If it's a 5 mark or 10 mark question, don't take 20 minutes just on the calculation or to calculate a full analysis. We'll get to that later. Just to actually present, for example, the at-acquisition journal. I mean, then it's not necessary to do a full analysis of owner's equity if you're only interested in what the goodwill amount is, for example. Then there's a very good question as well with regards to IFRS 18. And yes, AIC, the latest or newest standards are examinable, assessed. So yes, definitely in all these type of questions, you definitely use IFRS 18 as the basis for a preparation. But on that point, I must also just mention, remember how elaborate or detailed can your statement of profit or loss be? So if I go back to the previous slide, again, it will depend on the information in the question. If there is no rental income, income from investments, fair value measurements, then of course this portion or the length of the statement will be a lot shorter. So it will depend on what the required is, and you will notice from the questions, some of the questions also start with profit before income taxes. I mean, then this whole top portion would not be necessary. Or some questions state, don't disclose this profit attributable section as well. So then good exam technique would be to read the required plus the please note sections very carefully to ensure that you don't waste time. For example, giving the whole statement when it said, but start only with profit before income tax, for example. I see there's another question that is the analysis of owner's equity a must in the exam? And the question is no, it's a calculation method. We mark any calculation method as long as it's used. Personally, for groups, I like the analysis of owner's equity, especially when we get to the foreign operations, where we have to include then separate columns for the foreign currency, the exchange rates, etc. It's just an easy way to calculate the FCTR. So for me personally, I like it in that regard. But then it links in nicely with the next question in the chat that says, what is the quickest way to calculate goodwill without using the analysis? And I think that comes back to, if you know the analysis, you have to know it 100% in the sense that where each amount should be disclosed in an answer. For example, if they ask you this statement of profit and loss, and they say you can assume that there was goodwill at the acquisition, for example, or goodwill is not impaired, or whatever the case may be, then it's not necessary to even calculate the goodwill because goodwill will not be disclosed in the statement. And if they say this profit attributable to section is not required, then is it necessary to calculate the NCI column of the statement or the owner's equity analysis? And it would be, no, it's not necessary because you don't need any of the non-controlling interest amounts. And I think that's where you actually have to know your different calculation methods quite well and to use each one as appropriate in the different scenarios as well. There's a couple of hands you can come through.
Hi, Adonis. Can you hear me?
Yes, I can hear you.
Okay, perfect. I'm wondering if this is the perfect platform to ask, only because you brought up the Mickey example, which there are two numbers that actually confused me there. I don't know if you would be able to explain them, or it's better to ask in an email.
I think it depends on what the question is, but if it's very specific, maybe an email would be best, but it could also be to help some other students as well.
Okay.
Let's
Okay,
see.
maybe let me go for it and then you'll let me know. But in general expenses, general and operating expenses, they adjusted there for a reversal for the at acquisition debtors adjustment. So at acquisition, I think the debtors were undervalued. Let me just check my.
Yes, that's
Yeah.
correct.
Yes, they were undervalued. I have no idea why they went to then go and reverse that in the general and operating expenses, that 7,500. It didn't make logical sense to me.
I would like to answer your question with a question. Where would you have adjusted that amount for?
Truly nowhere else, actually. The only place that I would have thought about it was where I considered that amount was when I was calculating my my goodwill.
Yes, no, it's a very good question, and I'm asking it sort of tongue in cheek, but sometimes to know where to categorize a certain expense or income item is, like you correctly stated, there's actually nowhere else where it actually fits. And I think in this case, this is a good example based on the line items given in the question that there is nowhere else that it fits, because it's definitely not cost of sales when you adjust trade receivables. But I think the principle in that question that you're referring to, it's the same with inventory, is the current assets. So if at acquisition we adjust current assets with a fair value adjustment, then our starting point for the consolidation, which was the combined trial balance, we adjust the values through the at acquisition adjustments, we get our consolidated trial balance. But the important thing to remember with regards to an at acquisition journal is it never changes. So even if we bought a subsidiary 50 years ago, our at acquisition journal, we will still process. So in 1 year or 50 years, that trade receivables has long been recovered and that inventory has long been sold. So in that regard, we will always, within the 12-month period for a current asset, reverse the adjustment that was made at acquisition, because our starting point, which is the trial balance of the subsidiary, does not contain that inventory anymore. It does not contain the trade receivables anymore. But now if you write the at acquisition journal, we are still adjusting that trade receivable and that inventory, meaning our second journal, we will have to reverse what we did in journal 1, our at acquisition journal, to actually just ensure that everything aligns properly, then we're not including inventory and trade receivables that's not there anymore.
That makes
But it's a very good question. It's a pleasure.
Yeah, okay, I also
okay.
have a question. So,
Yes, you can come through.
because I was also working around what you were suggesting about the whole when do you need, as someone who's very comfortable with the owner's equity analysis, because it's so easy to just be comfortable with the owner's equity analysis if you really understand it and if you really see how it works together with the journals and how it works together with all like the disclosure. It's just that I was hoping, because I was doing the same activity that you're suggesting, that we should actually analyze and see when to actually use the owner's equity analysis, when to use the NCI, when to use the profit profit calculation that goes hand in hand with the owner's equity analysis. I was hoping that you could actually provide some form of direction, because it's kind of, I feel like it's kind of taking me forever, but I was hoping maybe as, you know, someone who has experience and who is our lecturer, you could maybe point us in the right direction as to when to use the owner's equity analysis, the NCI. I know for starters, if you're doing the statement of financial, your financial position, then you don't need the NCI. Or when you're doing certain parts of the statement of financial position, you don't need the NCI or the profit. But then sometimes I feel like most of the marks are usually in the owner's equity analysis and you can easily cross-reference. Yeah, that's what I needed help with, because I was working on it this long weekend.
It's a very good question as well. And I would start by answering it to say, I like pro forma consolidation journal entries. And the reason is you know which account to debit, which to credit. So for example, if we look at the current slide, which says sale of inventory, if we reverse the intergroup transaction, we would know it's debit cost of sales, P&L, credit inventory, SFP. Meaning, why is that important? Because if I then have to present a statement of profit and loss, I would know, okay, but cost of sales, I will debit with regards to that unrealized profit. If it was a statement of financial position, I would know the inventory I would need to credit. So my suggestion to you would be, if you look at a 100% completed analysis, for each amount that you see there, ask yourself, am I required to write a journal for that? And if I am writing a journal, what does that journal look like? And if you see an amount and you say, but I don't know where I should use it, then you should ask yourself, but should I be calculating it in the first place? And a good example would be, if you look at the at acquisition calculation of goodwill, and we say share capital, retained earnings, and then maybe IFRS 3 adjustments, is it useful to state share capital, it's 100, now allocate the parent at 60%, 60, NCI at 40? And we'd say, no, it doesn't help, because we will not use that information anywhere, so don't use it, don't complete it. But I think as soon as you are up to a point and comfortable that you're able to have a full analysis and for each amount account for it in a specific journal somewhere, then that is the first step to actually knowing, wow, this is where I use it. So if the required does not ask for the SFP, for example, or it only asks for statement of change in equity, or whatever the case may be, you would know, wow, but this inventory journal, for example, during the current year, it doesn't impact my statement of change in equity, apart maybe from then my statement of profit or loss for the profit for the year. But I mean, if you get to that point, I think you would have a very good exam technique, and then, of course, how to concisely and timely be able to answer any question. Before the next hand, I just want to say there's a question in the chat as well with regard to the previous question and the inventory and trade receivables and the reversal journal. And yes, the answer is you will, every year that you consolidate thereafter, have to recognize that reversal. And the reason is your starting point for the consolidation. Your starting point is your combined trial balance, meaning the trial balance of the parent and the subsidiary. And your starting point does not include that inventory and trade receivables. So the at acquisition journal, where you adjust those values, is you're adjusting something that's not there anymore, so you have to subsequently then reverse that as well.
And then is it not the reversals are also part of the owner's equity analysis, right?
Yes, because the whole way that the analysis of owner's equity is constructed is it's from when you bought it originally 50 years ago, and it contains all that history in there as well.
So
So
the
it's since
current
acquisition
year,
up to the beginning of the current year. Yes.
and then up to the end of the current year when dividends are distributed, which is why I'm so comfortable with it, even though I know that's actually not a good way to actually be comfortable with this whole owner's equity analysis. So I'm trying my best to actually explore other methods. Yeah. Okay.
I would say
Thanks.
if you've used it in your undergrad, stay with the tried and tested if you're comfortable with it, and rather try and refine those techniques. But again, stating everything boils down to the required. If the required asks you to only provide the acquisition journal, or it's limited, then of course don't go full on with a full analysis, complete it 100% before you start your answer. And I think that's part of the exam technique, is as you complete the amounts in your analysis to already use it in your answer, that when you get to your dividends paid example, you know, when I put that in my solution, I'm done, something to that effect.
Okay.
Yes, you can come in.
Sorry, my question is on, so if you have a contingent liability in the separate financial statements, so you have a court case, or you have just something where where payment is unsure, then in the separate financial statements you would then raise you would what do you call it, do a disclosure. So you'd provide disclosure for the contingent liability. But in the consolidated financial statements, IFRS 3 says it should be what do you call it, brought in as or like at fair value, which is the higher of IAS 37, or the other one, I can't remember the other criteria. But now if you then subsequently, so if they then state that subsequently the amount has increased, the fair value of that amount has increased, do you adjust for it in the, do you adjust for it in the analysis of owner's equity? That's my first question. And my second question is, if you adjust for it in the analysis of owner's equity, is it apportioned?
It's a very good question. So we're almost done with IFRS 10 and then moving to IFRS 3, where it will be dealt with. But while we are close to this slide, I would want to use that as basis and to say, remember, what is our starting point it's combined. And IFRS 3, I can then now state, of course, it's only applicable once, and that's the day that we obtain control. It's on the acquisition date, where we then have to apply the principles of IFRS 3. So on that date, even when we look at then this financial statements of the subsidiary, IFRS 3 would state, but are these assets at fair value? Yes or no? And then the liability, is it fairly valued? Yes or no? And then when we look at the liabilities, we'd say, oh, but there is no contingent liability. But when I look at IFRS 3 requirements, it might be that they say, yes, we actually are recognizing the liability because the amount is measurable. Then we recognize the contingent liability at acquisition as a liability in the consolidated record. So when we look at the separate records of the subsidiary, there's nothing. We look at the consolidated, there is an amount. So then there's two options that can happen. It's subsequent to that, we could say, but that amount has changed. And then we say, okay, but when we present this statement of financial position at the end of the year, or the consolidated financial statements, what is the amount that we start with? And it might be, oh, but it's still not recognized by the subsidiary as a liability. It's still a contingent liability. So our starting point is still 0. What is our at acquisition journal adjusted with? What should it be? And I should process that adjustment as a pro forma journal entry. The option B could be, but now by year end, the subsidiary has actually recognized that contingent liability as a liability. So our starting point is not 0 anymore. It's, say, 50,000. But in our pro forma journal entry, we're again recognizing that contingent liability as a liability as on the original date. So then we have to ask ourselves, by doing that pro forma adjustment journal entry plus the subsidiary starting point, is our value at the end of the year then correct? And if it's not correct, then we will have to process an adjustment.
But if you then process the adjustment, do you process the adjustment to the fair value, call it that, of the group?
Yes, because you have to think of the group from a group's perspective. If the subsidiary has now recognized the liability, so I know there's no amount there. So let me use this 25,000, for example. If that is okay, but that's maybe also not a good example because there's no adjustment. So let me use trade payables. Let's say that is now the liability recognized and on our combined trial balance. But when we process our at acquisition journal and we've increased it with 9,000 because that was the original value when it was still a contingent liability. So when we look at our consolidated records, we say, oh, but this is incorrect. It should not be 192,000. It should be 183,000. So then we would reverse what we did at acquisition to get you from a group's level what the correct amount would be. And normally when the subsidiary has recognized it as a liability, that is the correct amount to recognize it at. And the fact that we then at the group recognize it through an at acquisition journal, we are now changing the amount from the correct amount to an incorrect amount, and then we have to process a follow-up journal to get our amount then to the correct consolidated amount.
Okay, so just to conclude, it doesn't go through your analysis of owner's equity, the SIMS portion.
It will because since we must remember when the subsidiary recognizes the liability in its records, it would have said, for example, debit expense, profit and loss, credit to recognize the liability. But when we get to the group, we're saying, but that liability, we already recognized it. And now the subsidiary has also recognized it. So now we're sitting with an issue where there's now sort of two liabilities for the same liability. So to reverse the liability, we then would say debit the liability and credit that expense that the subsidiary recognized in its separate records. Because from a group's perspective, we're saying, but we've already recognized that liability / expense portion at acquisition. So yes, in our analysis of equity, we would then have to reduce the profit of the subsidiary during the current year to say, but that say for example, it's this 9,000. That 9,000 we already recognized at acquisition. So now that the subsidiary during the current year said debit P&L, credit liability 9,000, they're actually now recognizing expenses that from a group level, it shouldn't be there. We already recognized that 9,000 at acquisition when we acquired it. So in our analysis, we would take this 9,000 and add it back to its profit by increasing it. So to
Okay,
say,
and
but
then
from
it-
our
then it would
perspective,
be
the
a-
subsidiary actually made a higher profit. Yes.
Okay, and then it would be a portion between parent and subsidiary. So let's say
Yes,
the
because
50,
yes.
50% or a 40-60% split.
Yes, that's correct.
Okay,
So
perfect. Thank you.
apologies for this discussion and for students as well. I know it was a bit I don't know what's the word, not having the actual amounts, but I tried to illustrate the principle. But if if there's any questions, please feel free to just send an email and I can see if we can just confirm it. But that principle is how the majority or all of the IFRS 3 adjustments are subsequently treated. So even in the Mickey and Minnie example, if you go to the analysis, you will see in the section since acquisition up to the beginning of the year, we actually adjust the profit for that inventory portion, trade receivable portion, because from a group's perspective, we say, but we already recognize that adjustment. So now in the subsidiary subsequently recognizing it, we say, but from a group's perspective, it's now double counting and we reverse. Yes, the next question can come through. You're still muted. I see there's another hand.
Hi, sir.
Yes.
I just wanted to ask, do you recommend that we do the analysis? Let's say maybe the question asks us to perform pro forma journals, right? Do you recommend that we do the analysis or we just go straight to, we learn how to, because majority of us, I'm sure that like we don't know how to just dive straight to the pro forma. So we learn how to do that in like, for the sake of time, probably maybe performing the analysis might take time.
Yes, I think I tried to answer to a certain extent previously. It depends on your own calculation methods that you use and the understanding of the different methods, but the guiding point should be the required. So if the required asks for a full statement, then sometimes it's easier if it's a complicated, not a complicated group, but a big group and there's lots of transactions, there's lots of IFRS 3 adjustments that must be made, etc. Then it helps to have the analysis, maybe to keep track of all the different adjustments, just to ensure that you do not forget about any of the adjustments and to also remember to allocate NCI their share. But if it's a pro forma consolidation journal entry question, it might be easier just to do the questions because the top portion of the analysis, all those amounts go directly into the first at acquisition journal. So then it might be easier to say, but I don't even need to do that first part at acquisition in the analysis. I just can write it down in the journal. And then subsequently, the following journals also doesn't necessarily need to be in the analysis. You can just write it in the journal, but the important thing would just be to keep track of which amounts to adjust for NCI, because some of the amounts would impact the NCI's profit, therefore the allocation to NCI, their share of profit. But apart from that, that's definitely also a calculation method. Why I don't want to give a definitive answer is some students will then use the pro forma consolidation journal entries as a calculation method when preparing a statement. But then I would also say, but that might also not be necessary because a journal with 2 entries, it's debit P&L, credit SFP. And the next one would be, say, the deferred tax and then debit SFP, credit P&L. And then I would say, but is it really necessary to continuously write a 2-legged entry where you know one leg you won't ever use in your answer? I mean, that's for me, it might be a bit of a waste of time as well. So, but again, it depends on your own preference and the method that you're comfortable with.
Okay, thank you.
It's a pleasure. I see we are moving along quite nicely in the topics that we're covering. We still have the one IFRS 3 that we have to do. So the next slides that remain for IFRS 10 was just to show the intergroup transactions, how to write it down. You see, I included 2 examples with a solution as well, but you'll see in the end, I copied a answer out of Learning Unit 2. And you would notice as well, it's Mickey and Minnie. You would notice the amounts of, not that 2000, this 2000 and the 540. So if I go back, there's the 2000, 560, the difference of the tax. So have the slides now. I'm going to leave it in your answer. The one thing that I want to just add with regards to intergroup transactions, it's the same as for all the other accounting entries and adjustments. There is only one way that we do eliminate intergroup transactions. So it's good that you study it. It's good that you know it. You'll see in even the Mickey and Minnie one, if you look at the journals, it might be say, wow, it's a lot of work. But if you follow the logic, there's normally a lot of easy marks available for intergroup transactions. And it's definitely one of those principles that if you get it in a test or the exam, you should look forward to it to say, wow, it's there. This is where I'm going to earn my marks. I want to say almost this is where I'm going to get my money back. So that's definitely a topic like that. And you'll see when you get to Learning Unit 5 with regards to the associates, the principle that is applied follows directly from this as well. So if you put in the effort now, you would also make it a lot easier when you get to Learning Unit 5. But let me pause here. Is there any questions? Do you want me to briefly go through the intergroup transactions with you? Let's make it a democratic process. Should I put up a poll?
Yes, please.
Okay, so I'm not going to type this one. It's just going to be 2 thumbs up. So thumbs up for yes, I'm going to do the intergroup transactions now, or no, it's in the slides. Let me skip ahead. Okay, I see it's a overwhelming majority, so I'll see if I can make it short and concise as well. Thanks. It's a good process, I must say. I started doing the polls recently, but it's quite nice. The only drawback is you have to redo them every time that you present class, but I must say I enjoy it. Okay, so this comes from Mickey and Minnie. The important thing that I first want to just highlight here is it's gross profit of 20% on sales. So of course the calculation method is 20 over 100. What other way could we have stated it? To say it's a markup of 20%. That's similar. What is the alternative? If it's gross profit, oh, sorry, that should be ignored. It's if we assume it's a markup on cost, I'm going to just circle it again, sorry, then it's 20 over 120. So that is the distinction between the two. But again, it counts half a mark, a full mark. Don't take 5 minutes to first try and figure out, was it 20 over 100 again or 20 over 120? Just go with your gut, choose one, and then continue and not waste any time. Okay, so going back to the example, it's just to say that there was 80,000 intergroup sales. The subsidiary sold the inventory, which is very important because if the subsidiary sells the inventory, if we're adjusting the subsidiary's profit, it of course impacts NCI. So you should always keep that in mind. Who's the seller, who's the purchaser? If it's a subsidiary, they're the one with the profit, it impacts NCI. Then they say, okay, there was intergroup sales of 80,000, inventory on hand of 30,000. Okay, that's a bit of a kicker, but there's a net realizable value of 26,000, and then they gave us a profit after tax. So the formula to use is then 20 over 100 of the 30,000. Therefore, we know at year end there's a 6,000 Rand unrealized profit. The fact that they tell us the net realizable value was 26,000 means that the parent has already written the 30,000 down to 26,000. So of that 6,000, from a group's perspective, we only need to eliminate 2,000. So that is the principle that's applied. The next one I'm just going to skip over. That was just to illustrate the 20 over 120 when it's at cost. So coming to the first journal is, of course, remember what is our starting point. It's the trial balance, line by line, of the parent and the subsidiary. So yes, we have the revenue of the subsidiary and the cost of sales of the subsidiary. It's one economic entity. We cannot have transactions with itself. Therefore, we eliminate the sales transaction. The second portion would be then the actual unrealized profit, debit cost of sales, credit inventory, 2,000. Of course, remember your tax. And then at the end, we also have to adjust the subsidiary's profit with that unrealized profit because it's the seller. The fact that we are adjusting the subsidiary's profit means it also impacts our NCI calculation. I see there's a hand. You can ask your question.
Thank you. Sorry, can you please just explain again why we took the unrealized profit from the write down?
Okay, yes, it's a good question. I'll start with why are we writing down the unrealized profit. So let me start up by saying during the year we made 80,000 sales between each other. So if there was no inventory on hand at the end, we could say that the parent has subsequently sold the inventory to third parties. So any intergroup profits has realized because it's sold to third parties. But the fact that the parent still has inventory on hand at the end means a portion of that inventory contains intergroup profit, meaning profit that the subsidiary made on the sale to the parent. As we are now one economic entity at consolidation, we cannot make profit with ourselves. Therefore, we have to calculate, but what is the amount of profit that's contained in that amount to eliminate it, to write it down. But then the parent has already written down that 30,000 to 26,000 based on IS2 principles, the net realizable value. So of that 6,000 unrealized profit, 4,000 has already been written off because the inventory has a lower value. So we are only remained with 2,000 that should be recognized. And then that is the purpose of this journal, is then to take out that profit. But you must remember this is year one. Next year when we sell the inventory to external parties, at that point we would recognize this 2,000 profit as now being realized because it's to third parties that's external. So if we look at then the journal entry for the following year, this first one is not required. And why? Because we don't have, our trial balance does not have revenue and cost of sales of prior years. In which line item will we find that information? For profit and loss of prior years.
That will be in our
Retained
return.
earnings. So I
Yes,
can just
retained earnings. Yes. So if we look at this entry, we would say that first one is definitely not required. The second one, because there's SFP items, yes, we will recognize those directly, but then these profit and loss items will also go to retained earnings. So this first one is retained earnings in and out, so that we don't need to do any more going forward. And then this journal 2, it will just go against retained earnings, and there you'll see is our SFP. And now subsequently, when the inventory is sold, it's actually just a reversal of that original journal where we now say a debit inventory, debit cost of sales, do the deferred tax as well. And there we've done our adjustments. So you should actually look forward to getting an intergroup transaction that spans over a couple of years, because if you follow the principle, there's actually a lot of easy marks to get. Yes, you can ask your question.
And the only difference between well, not the only, but if the subsidiary sells, then we're just going to do a split between. We're not going to apportion the amount, but we're just going to do a split between what's done to the parent and what is journaled to the non-controlling interest.
I'm not sure I understand the question, but I can start by saying that how we deal with a transaction doesn't change irrespective of who the purchaser and seller is. The only consideration where it does come in is when we allocate NCI their share of profit. And there we definitely
then we need
have
to apportion. Then
yes,
we need to
but you'll see
apportion the
we include
amount.
the full one. Yes, so we include the
Yes.
full one against the full profit, and then, like you say, apportion. Correct, yes.
Okay.
Okay, this was just to illustrate again from Mickey and Minnie. This is where it's coming from. There you will see there was other adjustments as well. So this purpose of this was just to illustrate it's an easy principle. If you follow it, you can go to group statements as well. There is only one way that we eliminate the intergroup transactions. It's also coming up in Learning Unit 5 with associates. So if you put in the effort now, it is definitely an area that if you do get it in the test or the exam, you can get all the available marks. I see it's question time before we go to business combinations. At this point, I see the time is not on my side anymore. IFRS 3, luckily we've dealt with a lot of the principles already. And luckily we do have another class coming up on Wednesday. Before there is anybody that needs to step off at 7:30, I just want to state thank you for attending the class. We really want you to be successful. We try to make the learning also fun. Please reach out if you have any questions as well. I think a big part of this year, the study, is just to get that motivation. And I think the good part of sessions like this is that you can see you're part of a bigger group. And sometimes it can be a lonely journey, a difficult journey, and it could feel like a struggle. And I really want to say, if you feel like you really want to reach out to somebody, to a lecturer as well, please do so. We want to help, we want to assist, we want you to be successful. And like I mentioned earlier as well, it's not only in the short term for test 2, it is on your journey to becoming an awesome chartered accountant. Then remember tomorrow's class, the test 1 debrief, which is at 4. And then this class will continue on Wednesday. If the class is finishing earlier on Wednesday because it's shorter standards, then there might be time that we also do a practice question. I'm still thinking about that. I'm thinking about maybe doing question 2, but of course, 2 hours, it is very limited. At this point, I see there's a question, is the class over? No, it's not over. So I'm going to see if I can continue till the end. It was just sort of to give a quick hi and bye shout out to anybody that needs to jump off early. But I'll pause at this point. I see there's a hand. You can come through.
Can you hear me?
Yes.
Okay, so sorry to go back a little bit. I think that was Jonah Andrew that was talking about the total. So the reversal of the total sum, which is 80,000 one, I believe. I don't think that's probably that's the one. Yeah. So I don't understand why we're having the same amount when we are reversing between sales and cost of sales. Because from my understanding is that we are reversing the total sale because we're not supposed to even sell anything. However, how is it the same amount as the cost of sales? Because I don't think the cost of sales is going to be the same as the sales amount.
It's a good question, and I'll take you back to this slide and our starting point for the consolidation. So if I just look at the cost of sales, for example, you'll see we have the cost of sales of the parent, of the subsidiary. That gives us our combined trial balance. But like you say, we cannot have transactions with ourselves. So when you look at this combined trial balance, that cost of sales of 80,000 is included in the parent's amount of 1.3 million. So I have to reverse or take out that cost of sales because we're making sales to ourselves to actually get to, but from a group's perspective, what is the actual sales to outside third parties that was made? So your question comes back to that. When we start with the consolidation, what is our starting point? And our starting point contains that 80,000, which it should not contain because we should not make transactions with ourselves.
Oh, I get that. So are we okay? So I don't understand how, as an example, that 80,000 cost of sales is in our parents' our accounts, because okay, the way I'm looking at it is that the sales amount is not going to be the same as the cost of sales amount in this case. So it says this total sales was 80,000. So if it is 80,000, that's the total sales, not the cost of sales, because the cost of sales is going to be after us removing the 20%.
Okay, yeah, it's a valid point, but what I can ask you is for the subsidiary that sells, if it sells that 80,000, what would the general entry be? It would be debit bank, credit sales with 80,000, and then it would say debit cost of sales, credit inventory to take out my inventory. Do you agree?
Yep. Yep.
But then from the parent side, when it buys the 80,000, it would say credit bank, I'm paying 80,000, debit cost of sales 80,000.
Right.
So then when I look at it from a group's perspective, I've actually sold 80,000 worth of stock to myself because I have a revenue of 80,000 lying with the subsidiary because that's the sale that it made for 80,000. And then from the parent's perspective, it has that purchase price of 80,000 for cost of sales.
Okay, so if I understand it well, so you're saying because the buying company here, when they purchased it, they debited purchases, which is automatically cost of sales.
Yes.
As well. Okay. Oh, so if that's the case, that makes sense. So the way I was looking at it is that we only account for cost of sales when we are selling something. Okay. So if that's the case, then that makes sense. And thank you so much.
Yes, no, it's a good question. And I think it comes back to that understanding of the starting point and your combined trial balance. And that's why I try to focus on that slide quite a lot. It's if you think what is your starting point, the two trial balances, and you think of it, what should it be, my consolidated trial balance? Then a lot of these adjustments will start to make sense because your starting point, the two trial balances includes these amounts. But then I say, but I cannot have transactions with myself. I should take it out.
Mm-hmm. Okay. So the second question. Oh, sorry.
Yes,
you want to continue? Oh, okay. So the second question was on the when you're doing the elimination from realized profit. I think that's the slide that is open. And when you also have the net realizable value or write down to net realizable value. So I think I saw something like a principle that was giving us the difference between when the write down to net realizable value is bigger or smaller than the unrealized profit. I kind of found it was kind of difficult for me to understand why the other part we do not do anything and the other part you have to do a journal entry. I don't know if you can kind of give me some clarity on regards to that.
Yes, it's a very good question. I think it's also how the information is presented in the question, that it could have been worded differently, where it says the inventory on hand at the end is 30,000. So what they meant with that is the parent, when we look at its trial balance, started off with inventory of 80,000, but included in that 80,000 was 30,000 inventory purchased from Mini. But they said the net realizable value was lower, so the parent then wrote down 4,000 of the inventory already. So that balance was reduced. So of the original 6,000 intergroup profit that was made, we are now only left with 2,000 that must be eliminated. So if you look at our starting point, not that one, sorry, this one, it actually only contains 2,000 worth of inventory.
Okay.
And then that is, in the end, you can see that is what that adjustment is. We're saying there's 2,000 that's intragroup unrealized, which should be taken out.
Okay. So, what if in the case that the unrealized profit, which was in this case 6,000, only just unrealized profit was less than the amount that was written down? So why is it that we don't do any journal entry? Or maybe I'm wrong about that.
If the net realizable value was lower, so say, for example, it was not 26, say it was 20.
Yeah.
Then you would say, but from a group's perspective, that unrealized profit that was included has actually now realized, but unfortunately through a loss, because we had to write down the inventory to a lower value. We cannot sell it at the high value anymore. So then that intergroup profit is actually now realized, but unfortunately as a loss. Yes. So then no adjustment would be necessary in the group, because from a group's perspective, if that was at 20,000, we would say, but that is the correct profit. There is no unrealized profit included there because it's written down at the lower amount, which is the correct amount for IS2. Therefore, there's no pro forma adjustment necessary.
Okay, thank you so much.
Okay, is there another question?
Yeah, sorry, that's me. Two very quick questions for the sake of time. I just wanted to speak to the scope very quickly. You did give us a required earlier that spoke to what kind of investee is that entity. And so you also spoke about IS 28 not being part of this test, but later test. Is that fully not in the scope of this test, IS28 associates?
It's not included in the scope, no.
Okay. And then second question was IS21 integration with IFRS 3. So an investment in a foreign sub, is that possible for this test?
Yes, it's just important to notice that it's two different standards. So in this test, it's only IFRS 3 and IFRS 10 and IS 27 with regards to groups. IS 21, when it relates to group entities, foreign operations, it's only dealt with in Learning Unit 5.
Okay.
So it's a good question in the sense that, like alluded to earlier, if you really focus on your IFRS 3, IFRS 10 principles now, it will really assist you when you get to Learning Unit 5 and 6, that the additional concepts that you study, it is much smaller incrementally, and a lot of the principles, it's still applicable. So meaning, even if you have a foreign operation, you would still apply IFRS 3 at acquisition to fairly value its assets and liabilities, to calculate your consideration. You would still use IFRS 10 to eliminate intergroup transactions, allocate NCI, even if it's a foreign operation, or if it's in a consolidated statement of cash flows, or if it's disclosure or the related party of a subsidiary, etc. So the information that's studied now would definitely help you later on as well. And I think that's a good incentive to really also study well now as well.
Sure. No, thank you. Thank you.
Okay, then at this point, I see we are over time. I have reached a natural conclusion with regards to this topic before we start with business combinations. We have actually addressed or discussed quite a few of the concepts already. As I stated earlier, the plan was to go through the remaining 4 standards on Wednesday and then maybe do a practice question. But I think looking at the time now, it might be best then to pause here and then continue on Wednesday from this, because IFRS 3, as I just stated now, it actually links with a lot of the other topics as well. So I think it's important that we also give it the necessary attention that it deserves, because it is quite a nice standard, but there are some, not say tricks, etc., but there are some differences. It does have some recognition and measurement differences where it's not only fair value, where there are some exclusions, etc. So I would really then like us maybe then to start afresh on Wednesday with IFRS 3 and then proceed there to IS 37, IS 10, IFRS 13, which I don't think it's that comprehensive a standard, so it should not take that long to review the concepts on that front. So from my side, I just want to say thank you very much. I really appreciate the interaction as well and the questions as well. And I think that's, of course, how you learn. And thank you also asking for yourself, but of course, it's also a benefit to the other students as well, and to me as well, because a lot of the time it also makes me think of something else that I also wanted to say. So I really appreciate that as well. But apart from that, I really want to just wish you well. I want to say see you tomorrow, but that's my colleague. I'll see you on Wednesday, and I hope everybody has a good evening further. I am going to pause here. If there are some questions still that you want to ask, I am here, so feel free to ask. But yeah, thank you very much for attending. Thanks.
Thank you, sir.
Yes. Oh, and then I just want to say the slides has been posted as an announcement as well. So if you don't receive it, just send me an email. But thanks very much.
Hello, sir. Hello, sir.
I see there's a question. I'm still here. Do you want to ask a question?
Good evening, sir. I've got a question. I just
Yes,
wanted
I
to
can hear
find
you.
out. Hello, can you hear me?
Yes, I can hear you.
Yes, I just wanted to find out when the class will be posted. Today's class will be posted on my uni, sir. If we have to go through the video
It will be hopefully posted by tomorrow during the
tomorrow.
day, if that's fine.
All right, thank you.
It's a pleasure.
Hello, sir. Can you hear me?
Yes, I can hear you.
Yes, awesome. Yes, sir, I understand that we had already done IS-21 during the preparation for test one. So, however, when we were going through today's content, I see you did not touch on foreign operations, or maybe you might have, but I joined late.
Yes, no, that's no problem. Now the topics for test 2, it's restricted only to the topics of learning unit 2. So IS-21 is not involved. So I've just projected the topics for learning unit 2. So it's limited to these ones only. Can you see my screen?
So we might anticipate to be examined maybe on it's still low. So then are you suggesting that we might need to consider the foreign operations when we do integration further, probably in test 4?
Yes, you'll see the topics for test 4. It is learning unit 5 and 6, but then yes, also a revision of the previous tests topics because of the integrated nature, and of course test 4 being 80 marks as well. So no, but at the moment it's IS-21 foreign operations. It's not accessible or examinable for test 2 now.
Oh, okay, thank you.
It's a pleasure. If you joined late, I can also just mention, I don't know if it is clear that there are some questions in the learning unit, but of an integrated nature with regards to IS-28 and the equity method, but that's also not examinable now. That's also only for test 4 when learning unit 5 is done.
Oh, okay. Thank you.
Thank you. How's it going with your studies?
Everything is going quite well. I'm still trying to manage between the studies and the work, but it's not that bad as yet.
Yes, now I must say it is quite tough and it's a lot of work to study and hard work, but try to keep the end goal in mind. It's a tough year, it's a hard year, but make it count that it's only 1 year. So I think if you approach it like that and just do your best, and I think then the sacrifices will be a lot easier in the sense that you know, but it's only going to be for 1 year because I'm going to do everything that I can.
Yes, and then also when considering the scope of, is it FRS 3 or FRS 10? I understand that we also deal with changes in ownership. So since now the equity method is not, or maybe like since you had noted that the equity method is not that examinable in the current test, do we also need to consider, the changes in ownership when we study now? Because I see we don't have those other forms of ownership in terms of associate and joint ventures. So
Yes,
it's only
I'm
FRS
going to
10 and
move on
FRS
to the
3.
next slide, that maybe that would help. These topics, it's only examinable for test 4. So see the associates and joint ventures, joint arrangements, IFRS 11, the changes in degree of control, all of those topics, it's for test 4, learning unit 5 and 6. So what's being said now is whether you have control, firstly, whether it is a subsidiary, yes or no, whether it's a business combination, then yes or no to apply IFRS 3, but it's limited to that scope. Subsequent to that, if you sell a portion of your control or it's a subsidiary and you acquire additional investment and it's still a subsidiary, those type of transactions, it's only later during the year. You sorted?
Oh, okay. And then also, sir, whenever we are studying in terms of the standards, I understand that for the last question, in terms of the examination technique, does it help when you maybe perhaps when you are answering the question, and then instead of just listing the theory, and then let's say, for instance, when you are maybe discussing control in terms of FRS 10, and then you rather just maybe like quote the paragraph instead of detailing the theory, does that help, or do I need to first detail the theory before I do the application?
Yes, I think it would. It's a good question. It would help you. I think the question has come up a couple of times during the session, so it might help you to also look at the recording. But no, you should not only state the theory. You would not get any marks. You should apply the theory. So in that sense, is rather than saying an entity that controls another entity will have to consolidate, you would say entity A will consolidate entity B if it has control. I know it's a simple example, but that is a process to follow. So yes, you will still use the theory, but the application is very important. So I think to make that link, it's very important. You won't earn marks only for stating the theory, but the theory is important because that is what you use to apply the information in the scenario. Without the theory, if you just rewrite what the scenario states in your solution, that would also not earn any marks.
Oh, okay. So does it help to only just state the paragraph, or should I also maybe just state the theory and then apply the theory? Or
you should just apply the theory. The paragraph numbers, etc., that's not important. We don't mark it. The reason why we include it in our suggested solution is for completeness purposes, for revision purposes, that if a student afterwards wants to revise, we provide them with the relevant theory to go back to the standard to say, oh yes, this is what the standard is saying, this is where it's written, oh, okay, now this is how it's applied. But for you in practice, when you attempt a question, please don't just write half a page of theory and then only start applying. You should practice your technique to be able to start applying from your first sentence that you write.
Okay, thank you. That's all from my side.
Okay, now, thank you very much for the questions and thank you for attending.
Thank you, sir.
Thank you. So any other questions, or can we then call it an evening? Thanks, everyone. Yes, I see there's a hand.
Hi,
You
sir.
can come
How are
through.
you?
Good, and yourself?
I'm good, thank you. I just have a question with regards to the questions. At this stage, would you also recommend that we look at the IEC questions, or we should leave that for the integrated questions test 4?
I think that depends on yourself, but from my perspective, I would rather try to first focus on the different principles, how to answer the different questions. Are you able to recognize the IFRS 3 principles that's applicable, calculate the consideration, etc. You must remember at the moment, a lot of your learning should still take place on a module level, in the sense that getting your knowledge up to date with regard to the specific topics. If you now proceed to integration already and IIC, you must remember it's already a bit different to the questions that you will receive during the tests as well. I would rather focus first, like I say, on ensuring that for a specific standard, you are able to answer discussion question, journal question, presentation, disclosure, etc. So it will depend on your own studies and how far you are. And then also you will notice with regards to the integrated type of questions that we give, that's also now in Learning Unit 2 that contains IS 28 questions. You will see during the year, as you get Learning Unit 3, 4, 5, and 6, there are integrated questions with regards to accounting and the different topics. And I would also say you can practice those as well. And definitely you can re-practice a good question as well. If you attempt it the first time and you see it did not go that well, do it a second time. And the reason it would still be of benefit is there is only one way that we do, or not only one way, we only recognize, measure, classify in accordance with the standard. So every how, why, when, it's based on the standard. So if you understand those questions of when we are doing it, why, where, how, then when you get to the test and it's a similar principle, the dates are different, amounts are different, but you know how to account for that principle, you see you get a lot of confidence from being able to answer the question and earn the necessary marks. The pleasure, great.
Good evening, sir.